You either have a business, you're an owner user, like yourself, where you've got a business that's going to backfill this building that can support the debt service, or you're an investor who's got enough money that they can put toward an asset that if things go wrong, they've now gone beyond the stock market.
You're listening to Building Dallas by Arrington Roofing.
Hey, you're making an investment, dude. This isn't play money.
Yeah.
How do you keep people from maybe making a mistake, or is that even part of your job?
Well, I think when you get to kind of the commercial real estate level, that you've got some discretionary money at that point.
From sunrise commutes to stormy nights, from tough builds to big ideas, we're shaping the future of North Texas, one story at a time. Welcome to Building Dallas.
Welcome back to Building Dallas, the show that spotlights the people, projects, and perspectives that are shaping North Texas, one property at a time. Today's guest is someone who knows the heartbeat of this city better than most. Charlie Perdue is the founder of Perdue Realty Corporation, a locally owned commercial real estate firm that's been helping small business owners, developers, and investors uncover off-market gems across Dallas for nearly 2 decades. Charlie, actually, I got to know Charlie through a really good friend of mine, Dave Spence, who owns a lot of property, and Charlie's been working with David on a bunch of buildings, and I was having a hard time with a neighbor at the commercial building that I was renting.
Yeah, Bishop.
Over on Bishop. Yeah.
Yep.
And I called Charlie. I said, Charlie, man, I got to move, and it's time. It was just perfect timing. So find me a building. So we went down here, in Commerce, because I live in Kessler Park with Charlie, and we found this building. It was great. I loved it. We made an offer. It was like first day on the market. We made an offer, and they kind of verbally said okay. And then after the weekend, they came back, and I think the wife said, "Oh no, we want $100,000 more." And we're like, "I go, wait!" That kind of made me mad. Yeah. So I'm like, "Well, no," but they just thought it's too easy.
Right.
Well, it's not that easy. It was one of those. It's a time. It happens.
It does. Yeah. There's so many variables. I mean, it's all different. The biggest variable being the seller and the buyer. You just don't know the emotions that are tied to these properties, and they didn't have representation. So we went after it pretty quickly, and
they didn't.
I don't think so. Are we talking about the
that
West
very
Commerce?
First one? Yeah,
with the landscape.
Right.
Yeah, no, it was just. I think his name was Sean. He still owns it, and.
Yeah.
No, he didn't have any representation, which is not uncommon. But he, I think because we wanted it, he wanted it. And
oh my gosh, it's like you have a garage sale and someone goes right for that item, and you go, "Oh no, I don't want to sell that."
Well, it's
no,
yeah,
sell it.
It's childlike, right? It's like when you don't want something to play with, and someone else says, "Well, I'll play with it." The little kid starts playing with it, and the other kid goes, "No, I want that back."
Yeah.
It's kind of the same childlike behavior.
So Charlie's been through this a lot of times. I'm just like, oh man, I'm in a hurry. I'm kind of crestfallen, like, gosh, it's right close to the house. There's not going to be anything else. So then we actually looked kind of over in the Regal Row area. Looked at a building over there. That one didn't work. I think we ended up being the guys to push the guys in the lead. Someone else had an offer. We made an offer behind it, and then they bought it or something like that. And then there was another building over here off of Inwood, in that little area right between the river and Stemmons. Mm-hmm. We looked at a building over there, and I think cause same thing. It's like someone else bought it. Okay, so then this is what I love. Charlie calls me and goes, "Okay, Chris, I drove by this building. He drove by this building, and it's not for sale or anything. I walked in, I found the owner, and I asked him if he'd want to sell the building. He said no." So I'm thinking, come on, why are you telling me this story? But I said, hey, if you'll bring the guy over here, and he really wants to buy it, because you said, I really want to buy it. And I'm like, yeah. And we can make a deal, fine. But if it's going to be a lot of mess around stuff, I don't want to do it. And we came over here and bought the building.
Well, we were primed and ready to go, and maybe God was getting us to a position to be able to do that. And that's exactly what happened. Yeah. And then he regretted the sale, after that. It was, if I remember correctly, he sold it, and then he was like, gosh, I wish I still had that building.
Yeah, and I've asked him about this one back here, and
right, he still occupies the adjacent building, right?
But this and it's been perfect. And I just thought I've loved telling that story because it wasn't even for sale. I think you even said, Chris, this building just looks like the one for you, and I'm like, well, I don't know what that looks like, and it's been awesome. I'm a mile from the house, and it's served our needs. We're still nesting in it now. I was just showing Charlie we're redoing a little room up here in the front of the building where we'd come in. So but Charlie, tell me, that's my story with Charlie that I just love, and he's really made a big difference in my business. I want to start out with you telling people how did you get started here? I mean, did you grow up in Dallas?
I did. I was born in Kansas City, Missouri. My dad was a lifelong banker, and he got an opportunity to work for Interfirst Bank, I believe, in 1983. And so we moved from Jeff City, Missouri to Dallas. That's how we ended up here. Grew up in North Dallas, far North Dallas, so like Beltline Hillcrest area. Mm-hmm. And then went to Richardson High School, and then Texas Tech.
Wreck
'em. And came back here and did some just kind of various things. But then I graduated in 2000 from Texas Tech, and then in 2003, I pretty much had enough of, I did some advertising, marketing type of stuff, but I was working real hard, but I wasn't making a whole lot of money. And the money I was making, I was spending. And so, which is, on me, but I just had a conversation with my dad, and I just said, hey, what can I do to make money that's in proportion to my efforts that I put into it, And he said, well, you can sell commercial real estate or jets. And we had a family friend that was a pilot and sold jets, and he kind of he recruited all his salespeople from GE. They went through this GE school, and they were top-notch, sophisticated salespeople. And so I was like, well, I'm not going to do that. So I guess I'll do commercial real estate. And he hooked me up with a good friend of his, one of his best friends, Alan Edmondson, who ran the business development side for Fidelity National Title. And so I went and talked to him, and he said, let me put you in touch with a friend of mine, Jeff, over at Duke Realty. You should get in the industrial business. And I went and talked to him, and he said, can't help you. Why don't you go talk to George Dutter and Mark Miller over at Robert Lynn Company, which is now NAI Robert Lynn. And he goes, they've got the best training program in the business in commercial real estate if you can get a spot. So I went in there, we interviewed several times, and they said, look, we don't have any industrial positions, but we do have an office division that we're starting. Do you want to be a part of that? And at that point I was like, whatever you can give me, I'll take. So that's what I did. I started there in 2003, and then Bob Lynn, who started the company, the founder, was still alive at that point. He came up with like Trammell Crow and those guys. And he was super big on geographical focus, the specialization. He would divide Dallas up into all these different submarkets, like Oaklawn, North, uptown, downtown, all that. And so he would tell you, pick your market and eat, breathe, and sleep that market. And so in order to become an expert, you want to know everything about that market.
Yeah.
So I decided that I'd pick Central Business District, downtown Dallas. And, just being ignorant, just not knowing what my competition would look like, which is ignorance is bliss, which I truly believe, and it really is.
Sometimes,
I mean, it really is.
Jump in.
It is absolutely. And so I did, and I went in there hungry and, walked every floor of every building in downtown Dallas. I still remember a lot of the addresses and the buildings' names and all that kind of stuff. And, you got your suit on and you're schlepping your flyers and everything about you, and you're sweating and trying to dry off in the bathrooms. And then you're also dodging the security guards who were trying to get people that are trying to solicit their business out of the building.
Oh my gosh.
So there's all these kind of legendary stories about that with brokers. But so anyways, that's what I stacked those buildings, went after all the tenants to do tenant representation. So I did what's called tenant representation. And I did that for 3 years, and I felt like I knew what I needed to know. And I'd always wanted to start a business for myself, be in business for myself. And so I decided in 2003 that I would leave Robert Lynn Company and just do my own thing with my platform, which was unimpressive.
Yeah.
And I figured, look, all these companies are buying into me and what I have to offer, not my platform, and it was not the case. So anyways, I left in 2003, just kind of really tried to figure out what to do. I thought I would get into development, but had no money. I thought I would do certain things.
Money intense business.
Build the suits, all these different things. And so I went back to doing tenant representation. And by that time, I had gained some insecurities. I was on my own. I didn't have a platform. It was just me. And I was going and pitching.
When you say platform,
meaning a company behind me that's bigger than me.
Got some name to it. Henry S. Miller, something like, okay.
It'd be like Chase going out and starting a roofing company, leaving Arrington Roofing, and going, hey, I'm just as good as Arrington Roofing. And then go, well, we know Arrington Roofing. It's an established, commercial real estate brokerage platform. And, so that was my insecurity. I was like, okay, now I'm going up against the XYZs, and they've got 4 or 5 people on their team. And so it just kind of created a lot of anxiety for me. So I made do, and got by and did fine. But it wasn't until about 2009 when my dad's secretary at the time, called me and said, hey, Charlie, I've got this friend of mine. She's a lawyer and she needs some help with some office space. Can you help her? And I was like, oh, sure. Where's she at? And she goes, well, she's in Oak Cliff. And I was like, oh, I don't do anything outside of downtown Dallas. I had been so focused, and I'm really good at, I'm very disciplined in that regard. If there's something I need to do, I'm very disciplined about staying within those boundaries.
Yeah.
And so it was just uncomfortable. I was just like, oh gosh. But since it was my dad's secretary, I took it very seriously. Friendly. And went down there.
Friendly client.
So I got the address, went down there, and it happened to be at Route 80's studio, which happens to be one of David Spence's buildings.
Yeah.
But I didn't know at the time, didn't know who he was. But I pulled up. I kind of went through Bishop, past the hospital, took a ride on Davis, saw Route 80's, was impressed with the building right away, just as somebody that, constantly looks at real estate. And parked there, went in, met her. She's I think she still works down here. I'm not sure where she's at now, but she ended up not needing my help. She's like, well, I figured it out. But it was a really pivotal moment in my career because I had been exposed now to this entertainment district that I knew nothing about. And it had this old building stock. I mean, the vintage of these buildings were just really impressive, and specifically Route 80. So that building was really neat to me. So I decided to drive around and get a feel for this district.
And this is early 2000s.
2009.
It's 2009.
Yeah.
So, and the vibe in 2009, there was stuff going on here.
It wasn't
as much the urban pioneer, because I was here in the early 80s, and I mean, that was urban pioneer. There wasn't, we're fixing up houses and selling them for, in Winnetka Heights for $50,000.
Totally. Yeah. No, this was probably close to tipping point. Bolsa had been there for about a year at that point.
But nobody's building apartments over here yet, right?
No, the big boys hadn't gotten here yet.
Maybe that one over at Greenbrier and Beckley.
Yeah, there was Alan McDonald. He had a company, and I forget the name of that company, but there was a few companies.
The Demco?
I can't remember, but he had. They were buying up land, snatching up land at that point, but no, it was really early on.
But the Lakes had Bishop Arts established pretty well.
I think Jim.
It hadn't moved south with all the new stuff.
I think Jim Lake Sr. bought in 1985 or 1983. It was something.
It was
something
it was
around there. And then he died, and obviously Jim Jr. took that on and has done what he's done with it. So, but no, I decided to drive around and get a feel for the area, and I kept seeing all these cool buildings. I went by Bolsa and saw that cool building. I went down into Bishop Arts and saw some other cool buildings, and I went back to the office, then went home and started to piece it together. And I found that the common denominator of those cool buildings was a company called Good Space.
Yeah.
and David Spence, who's behind that. And so I reached out to David and I said, David, I'm this broker. I really like this neighborhood. Could I buy you lunch and you can tell me about it, and can I tell you about me? And he, in later years was just like, I'd got calls from brokers all the time, and half I'd ignore and the other half I'd take. And he took mine. And we went to lunch, and I remember vividly him ordering a grilled cheese sandwich, which I thought was super strange for an older man to order.
A grilled cheese sandwich?
And so I knew he was a unique guy at that point. But we had a great lunch, and he...
Did you eat at Hunky's?
Hunky's, yeah.
Yeah.
That's his favorite
That's
restaurant.
His place, yeah.
His favorite restaurant. And I just got burned out over the years of eating with him over there. But he which is Hunky's, is fantastic.
Oh, yeah.
So from there, we had a great conversation, and then I begged him for probably 2 weeks after that, just persistently hounded him for business, because I had determined at that point that I was going to move my business to North Oak Cliff and stop doing what I was doing, and then just kind of be a catch-all commercial real estate broker for this submarket that we call North Oak Cliff. Okay,
let me just so Charlie, you're in downtown Dallas, which is a very unique market. Maybe it mimics or Las Colinas has a little bit of downtown feel to it, and then you come to the old, other side of town.
Yeah.
What and you've mentioned that it was the appeal, maybe the history, or any other little what? You took a big jump.
I took a big jump, but I had no liabilities. I mean, I had very little liabilities, and I had no dependents. I mean, it was just me. I wasn't married at the time.
You're just a single guy just out there.
Yeah, and it spoke to who I am anyway. I mean, my bent is more private, and I'm not looking to be, in the limelight and in busy places and with a whole bunch of people. And I've come to learn I'm more introverted than I ever thought I was. And, confirmed by my wife and close friends that know me, and they're like, "Oh yeah, you're totally introverted." And I was like, "Oh,
in a business where you have to approach people."
And I never thought that of myself, but I really am, and now it all makes sense because of just who I am. And so anyways, it was this little market that was very unsophisticated at the time. A lot of blue collared owners. And so my goal was to come into this market and two things: earn their trust and educate them on what a commercial real estate broker does and the value that they can provide. That was it. And so for the first 2 years, that's what I did. And that was what, that and the fact that this was an entertainment district that was insulated, it was very unique. A lot of entertainment districts, are on main roads. Like if you look at Greenville or Deep Ellum or things like that, they're on these major, roads. Deep Ellum isn't, but if you look at Bishop Arts, you've got to go off of major roads to get into this little windy road to get into this place where traffic is not easy. And what makes Bishop Arts really special is that you can't drive a car more than about 15 miles an hour in Bishop Arts. Yeah. And so it's slow. Yeah. And so therefore it really enables people to walk around and to bring the crowds because it's safe and people bring their kids and stuff like that. So I thought it was really interesting. The building vintage, that aspect, of Bishop Arts District, and the fact that it was unsophisticated and no one was here. So I have very little competition. Options Real Estate was here. Joe McElroy's outfit was here. Square Foot. Those two were what I had sized up as potential competition for me. Right. Other than that, none of the people I'd compete with would ever come over here for a lot of reasons. It just didn't make sense financially. That was the biggest reason, because they have all these different splits with a bigger company and they got to make big fees. Yeah. I didn't have to do that. I worked for myself, and so I could make small fees and they still had a significant, impact on my bottom line.
And then you probably went from, I'm just imagining, from a downtown more of talking corporate, and you mentioned more blue collar, just regular guy owns the building. I mean, yeah. Explain that a little. What's the change, in a commercial real estate guy who's really used to talking to probably a pretty sophisticated investor or owner to a regular guy?
Well, it just spoke to me because I'm a regular guy. I'm nothing special. I'm not a super smart individual. I'm a hard worker. Yeah. And that really, that was a sinking mechanism with me and people of Oak Cliff, because there were a lot of mom and pops, a lot of hard workers. So we had that in common. That was the similarity that we had. And I could connect with people from that perspective. I'm out doing hard work, they're doing hard work, and we had an appreciation for that.
And what do you think because it's another question that comes into my mind. What do you think you had that gained trust for those people? Because I can imagine owning a building and have all these fancy commercial guys try to come in and do stuff for me, and I don't know if I trust you. What was your secret sauce?
Well, I don't know if it's a secret, but I think I in retrospect, I think I approached those people with humility, tried to, because I didn't know anything about Oak Cliff at the time, so there was a kind of an inherent humility that I brought to the table, but a certain level of experience too that would probably catch their eye and keep us talking. But empathy, really just empathizing with that person, whoever it is, and and what their needs might be, and then just kind of being there to answer the phone and take their call, and and follow up and show them that I care, and that it's not just about a fee, but it's about, I'm really trying to lay down roots for me and someday my family. And this is a market that I'm not going to abandon. This is I'm here for good.
And you've And you're still here.
Yeah.
We're talking about the start of something that's still going on. You don't have, I mean,
this is 16
you
years.
You are the pie man now, but we'll get into that later. Little teaser there, got the pie man. So where are we now from those early days? Is there more competition? And what is the commercial market like in Oak Cliff?
Yeah, well, let me back up real quick. I do want to give credit where credit's due. My career wouldn't be where it's at without David Spence.
Yeah, and you guys have become good friends too, and y'all run together. I mean,
he's a he's
it's okay.
Sorry.
No, it's okay. Hey, we had this. Jan Miller and I were talking in the last podcast, and I think that's a lot of Oak Cliff. There's some deep feelings. There's people that have helped.
There is. He's just he's an amazing guy, and he's just. Anyways,
yeah,
I wouldn't have what I have without him.
Yeah, I hear you.
So. Okay. So, yeah, he made countless introductions for me, spoke of me very highly, trusted me. And so I always wanted to live up to that trust. So there was two things that were really special about Oak Cliff. It was that fateful call that drew me here through the power of God.
Yes. How did that happen?
Yes. And then David Spence, who just kind of came out of nowhere and really just kind of took me under his wing because I appreciated what he did. And I had a deep interest for what he knew and his knowledge. Like he's got a capacity. I mean, you know him, better than I do, but he's got a capacity for knowledge that is super impressive. So anyways, I wanted to let you know that it wouldn't be possible. My story is not possible without him in it.
Yeah. No, I understand.
But Oak Cliff, from a market perspective, it is certainly evolved. It's one of the fastest growing, markets. I mean, in Texas for sure.
Yeah.
And it's a pretty diverse and amazing submarket. I think what makes it really special is really the individuals, the mom and pops. There's something about this neighborhood, this market, I'd call it, a submarket that it really attracts just hardworking people that want to do business for themselves and are willing to take risks and do that. And I haven't seen that in other areas that I've done business in necessarily. Mm-hmm. These people have really just deep interest in doing business, and going after a concept or going after an idea that they really love and that they're passionate about. And the most successful ones they have a hybrid business. They do one of, they do several things. Mm-hmm. In order to stay afloat. One part of that business is down, another part of the business is up, kind of gig. But it's special too because we've got a neighborhood that really supports this entertainment district and that uses the entertainment district.
Okay, so I live here and I know people from the other parts of town and other suburbs and come in here, but you're telling me the neighborhood really supports it well too, even though we've kind of got to have people coming in from outside.
Yeah, the destination can't buy into it unless the neighborhood around it supports it. Mm-hmm. If the neighborhood around it doesn't like it, then it's hard for anybody coming in to really validate, that area.
So people that are coming in kind of come in and say, well, good, it seems like the locals are here too, so it's got to be good. It's not just somebody did a good marketing idea, and
I think they envy somewhat and admire just people that are able to live here and use the entertainment district. Watching people bike from, their homes and come with their kids, walking with their kids or biking with their kids with a flag sticking out the back, and and then going up to Eno's and having a beer and having a pizza. There's something that's really just lovely about that I think people get a kick out of, and you don't see that in a lot of destination locations. So you've got kind of a twofold thing. You've got people coming in from the region to check out this place, and then you've got the neighborhood coming in to play and support what's going on. In a lot of in a lot of instances, the people that are that own these businesses that we frequent all live within our neighborhoods, in these 5 neighborhoods that we consist of.
Yeah.
So
okay, and now this is another thing that crosses my mind. You're in a business that eats people up. I mean, commercial real estate, you can do well, you can go downhill fast. I mean, you can make a bad investment. And it sounds like really what your flavor in this area and what you've developed is that maybe smaller entrepreneur. He's got a great idea, and it really, his emotion, everything is in it. How do you keep the emotional part of a guy in his business and his entrepreneurial dreams and everything, and the real life, hey, you're making an investment, dude. This isn't play money.
Yeah.
How do you keep people from maybe making a mistake, or is that even part of your job?
Well, I think when you get to kind of the commercial real estate level, that you've got some discretionary money at that point. You either have a business, you're an owner user, like yourself, where you've got a business that's going to backfill this building that can support the debt service, or you're an investor who's got enough money that they can put toward an asset that if things go wrong, they've now gone beyond the stock market. For most people, it starts with your home. That's the biggest investment that someone's going to make in their lifetime for most people. Beyond that, you've got the stock market. And then beyond that, you've got, commercial real estate, but all those things kind of work together. So by the time, I get to them, they can, what's funny about commercial real estate is there's, if I remember right, and I don't do any residential brokerage at all, but like when I go and buy a house, part of that process is we need to see proof of funds. We need a letter from your bank that says that you're qualified to buy this property. You don't get that in commercial real estate. It is just it's understood, it's implied that this buyer has got the cash to do what they need to do. So it is, I can't tell you the last time anybody said, does your buyer have money? It just is. Yeah. And it's more about the historical performance of those buyers. How do they close? Do they close? How quick do they close? What's the reliability there? Because generally speaking, these commercial transactions are longer.
So in this area, the area that you're in, are you dealing more with investor buyers or owner buyers?
Yeah, all of them. So I got 3 tranches that make up my business. I represent small business owners, entrepreneurs. That's one. Number 2, I represent investors, people that are looking to buy buildings with tenants in them, or buy empty buildings to create some sort of rental income. And then number 3, developers. So I'll go out and I'll assemble land for commercial real estate developers, mainly for the purpose of multifamily and mixed use. And so those 3 tranches, that's my business. And beyond that, I tend to represent buyers only, or primarily buyers with off-market deals. I rarely do things that are on market, where you see a sign and you buy it. Most of I would say 95% of what I do is in the shadows, and it just like this building, Chris. We bought this building; it was not on the market.
No,
that's what I do. And there's a certain story and just an allure to doing off-market deals for both the buyer and the seller. And there's pluses and minuses there's downside and upside to that, but that's what I do in a nutshell.
I think that's not something I ever thought about, because you always think, well, nothing's for sale unless you see a sign in front of it. Right. And you're saying, no, stuff's selling all the time. Things are moving, and you'd have no idea. No idea. And to Chase's point earlier about just kind of land appreciation, property appreciation, taxes, a big part of trying to, the process of mitigating, property taxes, is trying to keep as much as you can secret about that transaction. And there's ways that you can do that throughout the acquisition process. But there's, a big way is just, your property never goes up for sale. I mean, they see a deed transfer, the county does, but they've got to make assumptions at that point. So, the little you can let the public know about what you're doing, the better it is for my client, and so their interests is top priority. And so I pursue more off-market opportunities. On your website, it says, business ethics and morals guide every recommendation. I'm sure in the commercial real estate industry, there might be some lying and cheating going on somewhere. Yeah. Any insights on that, or any, like, for the people that are listening, what to kind of keep an eye out for and not to get shafted on a real estate deal? Call you. That's one. Yeah. Let Charlie take care of you. Yeah, maybe. Yeah, it is. I mean, in every industry, you've got your wolves, you know what I mean? In your industry. Every industry has bad apples. And it's never the easy road to do the right thing. It is a hard path to follow. And I think you just have to stay true to yourself. And if you've got a commitment, to where I've got a commitment to North Oak Cliff and the people that live in it. And so I'm never going to sustain my presence here if I operate, like a jackrabbit. I'm not going to have any staying power. So you do have to, make sure that you're operating, above reproach with everything that you do. And sometimes you fail. Sometimes, life gets the best of you and you make some wrong decisions, but it's how you come out of that and, in humility, ask for forgiveness and, try to work it out. But yeah, there is, it's easier for brokers that kind of sniper in, sniper out, that don't have a real geographical focus, that they'll do a deal over here and they'll do a deal over here and then they'll do a deal up in Frisco and because they're just they're here one day and gone the next, they just want to get their commission and get out of town. It's fee-based interest and that's all they're doing. They're after that. They're not after building a presence. And so, I think that's as a reminder to everyone, Charlie works and lives in the area that he services. And so you see people they're your neighbors. You've probably done a lot of deals that you've helped your neighbors. That's really funny you mentioned that. One of the things, I used to make the commute for years, 45 minutes up, 45 minutes down from where I grew up. And in 2001, we moved the family down here. So what was so just really cool about what I learned when I lived here was just kind of looking up who my neighbors were. And a lot of them are my clients. I got Rick Barton down the street, Larry Vanderwood, just all these people. I live beside Robert Gossett, who's I've worked on,
when he was with Graham Bank and other things like that. And then just the small world that all that entails, it's just, anyways, I can go on with just a list of people that are all in my neighborhood, but we've all done business together.
Okay. So I'll give you a minute to think. I want you to think of a story of a small business owner or a buyer, because you said you mostly work with buyer, that was a real success story. Maybe that started with, oh my gosh, I don't know if this is going to work, guys, but you overcame a obstacle or something, and it was one of those fun stories that you're like, wow.
Oh gosh. I mean, I have tons of them. Tons of those
just
stories.
Pick one.
I mean, the most recent one, we finalized this transaction, I think it was last week or the week before, and it was a big struggle. And it's a building that we all are familiar with, and the seller had come across some hard times, needed to get out. The bank was going to foreclose on the building. We came in and rescued that deal. I brought the buyer, and again, another company that you guys are familiar with, which was really, really cool because this building was going to serve their needs as far as growth goes for way into the future.
So this is an owner.
This is an owner, user.
Yeah.
And, the seller had been hiring all these brokers to try to find investors to buy this building because it has income. It has a current
and they figured they could get a faster sale, probably.
Faster sale, but also, generally if you've got income in a building, the way you approach value on those as far as price goes is through what's called a capitalization rate. So you apply a cap rate to the income stream, and in the past it's been pretty low, those cap rates, which have been good for sellers. But since interest rates have risen as high as they have, and operating costs have gotten so expensive, those cap rates have gone up, which is better for buyers. So he kept looking in this kind of silo for these investors to come buy this property on a cap rate. But the tenant was great tenant, been around for about 5 years, but doesn't have really any impressive credit. Doesn't have an impressive credit profile. He's not a credit tenant, what we call a credit tenant. So he's just kind of you got to look at his financials and make sure that their financials are going up, and you can have some confidence because, again, they're buying an income stream, and so the emphasis is on the tenant. If the tenant goes away, well, then I overpaid for a building. So that wasn't working out well for him. And he gave me a call, and I called a client that I've had for 10 plus years, and I said, this building would be good for you guys. They said no at first and moved on, and a week later they called and said, is that building still for sale? And I said, I think it is.
Wow.
So we picked it up, and we had to jump through a bunch of hoops, and it was super it got super frustrating throughout the process and challenging because it became clear that the seller couldn't even meet his obligation to sell the building based on the money we were paying him. And so the lenders were coming after him saying, we need our money back, but the price that we had negotiated was actually below what he owed to the bank. But he couldn't, that difference, he couldn't afford. So I had to gingerly talk to my clients about, look, let's give back the rent proration, let's give back the security deposits, let's give back the tax proration. All the credits that traditionally a buyer will get, we had to give back in order to make the deal work. And we still came out really good, from an investment standpoint. If you looked at it purely from an investment standpoint, I think we landed around a 10 cap, which is a really good cap rate for a buyer. But the bonus of it is they're going to, whether the tenant goes or stays, if the tenant leaves, they can backfill the space.
Yeah.
Because they've got a proven concept that makes a good money.
Wow.
So it was really challenging. Many calls, many early mornings and late nights of trying to
But you saved a foreclosure, which is a nightmare.
So it was a
Who
win-win-win.
wants to go
It was
through that?
it was a win for the seller because he didn't have to go through that process. It was a win for the bank because they didn't have real estate on their books. It was a win for my client because now they've got an investment. Now they've got a building that's going to secure their future well into their old age. And it was good for me.
Yeah.
So everything aligned.
That's a great story.
Yeah.
So okay, let's zoom out a little bit. And do you have any overview of what's going on in commercial real estate right now? I mean, what does it look like?
Yeah, it's a good question. We are coming off of since COVID. I'd say in 2001, interest rates hit an all-time low. In 2001, COVID was 2020. So in 2020, I'd say around like April, interest rates hit like 3.5 or 3.25%.
Yeah.
They went way down. And they stayed way down at 3.25% for 2 years. So not until about June of 2022 did interest rates start to spike up. But during that time, coming off of COVID, the government had flooded the economy with money. And so people came out of COVID, ready to get back into it. And money was almost, it cost no
free.
It was almost free. It was free money. It was the lowest it had ever been. And so buyers were all over the place. And that time was a very good time to be a seller because it was just amazing. It was, I'd say, low-hanging fruit, but it was, you could have half the story and get a deal done. It was just like, we've got this deal, and before you'd finish deal, it was like, let's get into it. Let's go get it. And so, but it also had drawbacks because it really gave a false perception of what value really was for real estate and what value really was for businesses. People were selling businesses too. And so it gave this, just this overinflated sense of value of a business that just wasn't really there. So these last several years have been tough in the sense that, in 2002, interest rates started going up, reaching 9% commercial rates. And now I think they're down to 7.5%. Prime's like 7.5%. And so it just sidelined all the investors. The investors just said, look, we're going to put our money in treasuries and we're going to make 5% and we're just not going to do anything. So, business and commercial real estate hit an all-time low. I mean, it was a big slowdown. And so coming off of that, we thought maybe the election would people would get back to normal and there'd be some optimism with just a new president. And it's just been just kind of touch and go. I mean, I've been very busy, but it's very, all the deals are much more scrutinized. Everybody is evaluating their deal with a closer eye now. Okay. And things have to be relatively perfect for deals to get done, versus over the last 2 years where it was just like, we've got so much margin because money's so cheap to borrow that we have so much margin from a cash flow point of view that we can afford to take risks. And now, because money is so expensive to borrow, your margin is diminished. And so you've got very little buffer to really play with. So you've got more risk on the table. And so now deals they're harder to get done.
Is there a hot neighborhood right now or a favorite area you like to sell in? Or,
well, I mean, to my earlier point, I only do North Oak Cliff. So I have a geographical focus. And so my submarkets that I patrol and I transact in are West Dallas, North Oak Cliff, and East Oak Cliff. Those three core urban areas around downtown, those are the only markets that I transact in. And I transact on every property type except for if it's in my market, I hit that property type, except for residential.
And so, just for clarity, West Dallas is kind of Trinity Groves area, what's known. North Oak Cliff, Bishop Arch is what everybody knows.
Yep.
But what East Oak Cliff, what would the vernacular?
Dallas Zoo. So like East Oak Cliff is everything east of 35 all the way to Keast. Basically, Keast kind of runs like this.
Okay.
And East Oak Cliff has gained a lot of momentum lately. It's kind of we have hope in feeling that East Oak Cliff is going to be like Bishop Arch in 20 years.
Okay.
And so we've got some momentum with the park deck that's coming in between Marsalis and Ewing, and then Dallas Zoo, which butts up against that park deck. And
they're building that park deck now.
Yep. And then you've got a lot of development that's starting to happen behind the zoo. So think of the zoo as the nucleus. It is the value of real estate is higher the closer it is to the Dallas Zoo, and it just kind of dissipates from.
Where is La Reunion? Because I hear
that's West Dallas.
That's West Dallas?
Uh-huh.
Okay.
Yeah.
What other areas are there in the East Oak Cliff area
There's a place called Vermont Village, which is Ewing in Vermont, that has a cachet of old buildings that I'm putting investors in and users, and then there's what AJ Ramler with Proxy has kind of coined as East Dock, and he's doing a 60,000 square foot development at basically Ewing and Clarendon, which is on the south entrance of the zoo. And so there's some multifamily that's being built up there. And, my job has been to kind of place the right developers, and investors in those areas to start kind of transition that neighborhood.
Wow. So that area is going to change a lot.
It's going to change. And the impetus for that was really the investors being priced out of end users, and entrepreneurs being priced out of Bishop Arch. It's at a point now, because how developers work, they don't come early to the game. They're the last people to get to the market. They need a proven market in order for them to justify the risk to go in, because their costs are so high. Their developments are 10 to 30 to 40 to 50 million dollars.
Okay.
And so they would rather buy high and have little risk or no risk than come in early, buy low, and have this huge amount of risk on the table.
Right.
So the risk is where the small business owners, entrepreneurs, and investors play in.
Mm-hmm.
They dabble in that, and they'll go in and they'll buy something up. They'll either entitle that property, or they'll just sit on it, or try to monetize it. But then they'll contribute and either with the developer or sell to the developer. But that's kind of the evolution of real estate.
So Charlie, when you've got this shift in an older neighborhood, do you know which way it's going to go? Do you know what, like, is there some kind of a pattern where, okay, it's going to be more office heavy, or it's going to be more entertainment heavy, or food, or do you know, or does it just kind of organically happen?
Some of it's organic. You can kind of predict it based on the demographics. You know what I mean? You can kind of, which is kind of funny, with Bishop Arch, it's kind of an exception, because it is, historically the demographic around the immediate area of Bishop Arch has been very low income household, median income.
Just little houses.
Just little houses. And I mean, I think your household income was around like 40 to 60,000. So people would come in from Chicago, investors and stuff, and they're like, I hear we need to buy here. And it's like, but I mean, these houses, and they just didn't understand the demographics, but it was an anomaly. Like, people would come in and it was a destination location. And then you had these kind of 5 affluent neighborhoods around Bishop Arch: East Kessler, Stevens Park, Kid Springs, just Winnetka
Yeah.
Heights. All these neighborhoods were around it that would support it, and so they brought their discretionary income and supported Bishop Arts. But
So that has helped.
It has
to have some affluent areas that can really put some money into those businesses and keep them going. Because I know you bought, I don't know if you still have or if you office there, you bought a little house for your
one.
office, but next door to you was like a coffee bar, and then next to that was a bowl restaurant place, and then it was a bunch of different, and then some retail and
and the zoning that got put in place there, which is, I think it's CD7, but anyways, it allows for those permitted uses. You can do office, you can do retail, you can do a private club, those kind of things. And so
it's pretty wide open. Like for some people that might be scary to go, well, I don't know if I want to put my thing here, because I always thought that businesses like to go in the same area, like you see an area where all the restaurants are, or there's entertainment over here, or there's offices over here, and it's kind of mixed. Is it kind of mixed up?
It is mixed. We have, I think we have more restaurants in the past than we've had now. We have kind of a healthy amount of retail, but I mean, what really sells is alcohol. I mean, that tops everything.
Mm-hmm.
So it is a consideration for, I think any small business owner in the hospitality space to think about alcohol, and certainly for investors when they're looking to fill buildings, they're looking for, in a large degree for alcohol sales, because it's sustainable. People are going to do it. But what's also unique about Bishop Arts, about this area in East Oak Cliff and West Dallas, not as much West Dallas, but North Oak Cliff and East Oak Cliff, is that you've got a large stock of small buildings, okay, versus other neighborhoods or other commercial districts where you've got these big, large buildings, which you and I can't go buy. It's just too expensive. But you can go buy
it's an old grocery store, right? It's like you need a lot of money, and but in Bishop Arts you can go buy a cottage, for $500,000 to $7 to $1 million. But when you get into it, you can afford that. It's plausible to think that someone. So more players can play over here.
It is open to a wider market, so you get more creativity. You get more of these mom and pops, Lucias, other things like that are, they could go in and they can lay down roots themselves. They can buy the property. It's achievable, digestible. They can afford it. They can go get an SBA loan. You can't do that in other commercial districts.
Yeah.
And so it makes it special in that sense. And so I think that's why we have such a diverse, amount of just concepts and small business owners.
Yeah, I didn't really think about it that much, but I don't know. I don't know if there's a chain at all, chain store, some national name. It's the guy that lives over on Clinton that started a store over here, and it's him.
Yep.
And that does make it rich, because then you go, hey, if I want to go someplace and I want to see some things that I don't see anywhere else, then you come over here, because you go, I don't know what I'm going to see.
Yeah, and there's also an inherent accountability, because I know you and you know me, and I know Shannon Effendorf at Oak Cliff Coffee Roasters, and he knows me and my family. And so there's this accountability that you are beholden to with the people in your neighborhood that you want to live up to. You know?
I called Cameron Cox of Cox Farms the other day, because he went to school with couple of my sons, and I'm like, okay, you're out of meat. Can you go get some more steak? And it's like, I'm talking to the owner of the store. He's like, yeah, I'm doing everything I can, Mr. Arrington. Thank you for calling.
Yeah, and they're low on eggs too. Yeah, Mark Cox over there, he's a really nice guy. But I mean, he's a great example of that, But most grocery stores that we see around here are chain, with the exception of that one. Yeah. And now we're getting a Sprouts. So I don't know how that's going to impact his business, but we'll see.
I'm excited for it to be here. I mean, I think every once in a while it's nice to have a big player. What's your go-to spot for lunch in Oak Cliff?
Taco Deli.
Taco Deli.
I go there
Oh my
4 times a
gosh.
week.
Are you kidding me?
I go there. I was there yesterday. I was there the day before. I'm there all the time.
What's your taco?
I get 2 Mexico City chickens on wheat. I mean, that's it. I mean, it's
Y'all hear that?
it's the healthiest, fast serve place that you can go to, in my opinion.
Oh, gosh.
All it is chicken and onions and cilantro.
These guys are always going over there. Do you ever go to
I see Chase there a lot. I mean,
Yeah.
every once in a while I'll see him there.
I know.
I don't see you. You're probably at Jimmy John's or something.
No, I'm at Grill 303.
Okay.
Because they have a tequila chicken. I get that every single time. The kids will tell you. I am such a rut person. I get one thing and that's all I get.
Yeah.
I mean, I walk in, they just go get my food.
Yeah,
They
we
don't
all
even
are.
ask me.
Yeah. I mean, that's another great thing about this neighborhood, right?
Oh, yeah.
It's reliable in that sense.
Yeah, wherever I go in that I frequent often, they're like, okay, they just go get it
They just go
because
get
I'm getting the same thing pretty much.
Veracruz is like that with me. It's
No.
just, it's like, do you want the fish tacos?
Isn't that funny? Okay, if you could leave our audience with one thing to remember about buying, selling, or investing in Dallas, what would it be?
I think you should do. Here's a common mistake I find is that I will find that. Are you talking about from a buyer's perspective? I'm sorry.
Well, because you're pretty much a buyer guy. You've kind of mentioned that. Yeah. Go with what your main deal is.
Well, from a seller's side, I see a common mistake of people just going to people they know. And so a lot of times they will go and hire a realtor, to sell a commercial property.
Oh,
and
that doesn't really know the area.
And it's not that the realtor can't do a commercial deal. They certainly can't. But it may not be that they've picked the best person to represent their best interest in that transaction for that particular property in that specific submarket. And so I see lots of money left on the table from guys like me that are able that have that knowledge, that go in with their buyers and buy the property for what they listed it for, but they left a lot of money on the table. And so from a seller standpoint, do your homework, find out which brokers are around, go look at signs, go ask your friends, and no hard feelings. Pick the broker that's going to serve your best interest. From a buy side, it's all about the money. So get your capital down pat. If you're, don't call me or some other broker and go, this is what I want to do, I'm ready to go do it, and not have your financing in order. If your financing is not in order, you're going to be beat up every time.
Yeah.
You're going to not be able to compete. So that's the first thing.
Do the sellers look at, I don't know if they want to sell because he's not serious, I'm wasting my time?
Well, I don't take on any customers. I mean, at my stage in my career, and given the fact that I only work in these markets, I know pretty much everybody. And so when I come with a buyer, my hope is that they understand that I'm not going to pair myself up with somebody that's ill-equipped to transact.
Because you got a reputation.
Because I have a reputation not only in the market, but with those brokers that I have to do business with. I want to live up to their expectation. I want to congratulate them for choosing me and my buyer, because that takes a leap of faith. And so my buyers know, like, look, we're not going to retrade deals. We're going to stand by our deal and we're going to close. And the only exception to that is if there's some environmental issue that can't be worked out between buyer and seller,
right,
then we probably need to part ways. But other than that, you've made a deal. Let your yes be yes and your no be no, and let's get it done.
Got it.
Yeah.
Okay, I'm gonna end on, because the interesting thing about you right now too is, we're putting a roof on this little cottage. It was a little house,
yeah,
and Dave, man, it has to be a certain color, and it has to be a
Very
certain
involved.
way, and it's got to be, everything's got to be straight and square. And I tell him all the time, I go, Dave, all your buildings are handsome. You have handsome buildings. Their collars are straight. Their pants are all pressed.
They're perfect.
They all look very nice. And I go, well, so who's going here? And I remember him just kind of going, oh, it's a couple little girls, and I mean, they're going to do a pie kitchen, and I don't know. I mean, Dave really likes to have long-term tenants.
Yes.
You know.
Yep.
I mean, and it's great for a property owner to have long-term tenants. And he's thinking they're starting this thing up, and I have no idea. And I think they even lived upstairs when they first started this. And this is the Pie Emporium.
Emporium Pies.
Emporium
Yeah.
Pies.
Yeah.
And if you don't know about Emporium Pies, then you haven't eaten pies, because they make the best pies. Yeah. And now, what's the story? All of a sudden I go, I see Landon over there, and because I went over there, what was it? It was for Thanksgiving or something, and you guys have got a booth out front, and you've got a bazillion pies stacked up because everybody wants a pie. And I'm like, what are you doing here? He goes, she says, oh, well, this is our pie place now. Like,
our business.
What? The Perdues own the pies. So finish on that. What happened?
Let me tell you that story. So, those 3 tranches I talked about of who I represent: small business owners, entrepreneurs, investors, and developers. So that first tranche was Megan and Paul Wilkes, who started Emporium Pies. I represented their interests in commercial real estate and handled the negotiation of their leases, helped them grow from a retail unit store perspective. And that was 10 years ago. That was 12 years ago.
Okay.
And I was really fortunate to be on the ground floor with them when David was interviewing them. David called me in. He called me over and he's like, look, I found these girls. They're right out of college.
Yes.
And they want to start this pie company. And I said, okay, well, I'll be right over. And so they came prepared. If you know Megan Wilkes.
I don't really know them.
Well, she is prepared to the T, top-notch, astute, very business-minded individual. And she came prepared with all those traits.
Yeah.
In tow, and she just had this great business plan, and Mary was there, and David, as David naturally does, injects himself into whatever is being done. And to David's credit, David champions tenants more than any other landlord I know. So he truly believes that interests are aligned, and he looks at them as a partner. And so he looked at them, and so when he hears this business plan and he thinks that there's other things that these people can do that might behoove them in the future and increase their bottom line, he interjects. And so they went through kind of their business plan and figured it out together with David's help, and then they were off and running. They chose 314 North Bishop, which at the time was a different address, but Megan had the idea to change it to 314, which is 3.14 is pie. So,
oh gosh.
Yeah. So she changed the address to 314 North Bishop Avenue, which was real clever. And of course, David was on board for that. And she started this pie company. And so through that process, she got to know me. And I remember, I don't know why vividly I remember this, but I was walking down, a couple of years later, past Hunky's toward my office, crossing Bishop, and Megan was coming out of the pie shop. She goes, hey, Charlie, do you have a second? And I said, sure. And she goes, can you help us grow this company, like from a retail perspective? And I said, sure, And so we did. We opened a store in downtown McKinney Square, and then Deep Ellum. So we've got one beside Pecan Lodge, and then our 4th store is over in Fort Worth, and near Southside, and it's kind of a slow burn, and it's going through a transitional period and stuff like that. But she had kind of aspirations to grow this company to about 6 or 7 locations, and then she was going to kind of move on. She'll tell you, admittedly, she likes to start things. She just doesn't like to sustain things. But she did a fine job sustaining them. She sustained it for 10 years before we bought it. But she had called me up and said, Charlie, I think I'm ready to go. I think I'm ready to call it quits. Christmases, holidays are really tough on staff at Emporium Pies. We sell thousands and thousands of pies. And so we worked through the night to fill those orders. And, there's only so many of those that you can probably take. And I think she, probably had enough. But she was ready, and her family was ready, and she had aspirations to go to Seattle and do some things. And so she called me and said, hey, can you sell this business? And I want to sell the commissary, building that you bought us. And I said, well,
that's the one over on Plowman.
Yeah, Plowman. And I said, well, I'm not a business broker. I can't help you with that. And she goes, yeah, you got investors in this space. why don't you just, I trust you, you help us. So I took it on. And so I went after like-kind operators. I went after private equity companies, and I went after high net worth individuals. And out of those 3 boxes, none of them would pan out. The like-kind operators had different agendas and budgets for different growth opportunities for themselves, so they didn't have a budget for that. They couldn't acquire Emporium. And then the private equity companies, they had interest, but it was just too small. It was just below their radar. They couldn't scale it, like I think they wanted to. And then the high net worth individuals, they had the money, but they didn't have the Megan and Paul to replace Megan and Paul.
Yeah.
So unbeknownst to me, my wife had been working in the background by just kind of talking to her sister, Jen, about this prospect of Emporium pies selling. And so one night, I think Landon came to me and was like, hey, what if we bought this company, type thing? And I was like, oh no, we're not going to buy this company. We don't need this company. We're in the real estate business. You like birds. Let's just do this, And she was like, oh, and that just kind of went on. And so I approached Megan and I was like, Landon and I are thinking about maybe buying this company. Would you be open to that? And she's like, I would love to sell this company to you. And we knew what she needed and what wanted. And so Landon, kind of behind my back, had a conversation with Jen, and Jen had been running this nonprofit organization for years that she managed like 40 people and did a great job raising money for them. And she was going to go off to business school. And Jen goes, Landon, if you guys buy that company, I'll step out and I'll run that company for you. So there was our Megan.
Oh, wow. Okay, well, there's a big piece of the puzzle right there.
That was the big piece.
Yeah.
That was the linchpin. And so, we had a meeting in our backyard with Landon and Jen and me. So she, the inherent risk in this is the family dynamic, working with your family. You probably know that.
I got family.
It is something that I've tried to stay clear of for a long time.
Mm-hmm.
So, I said, look, there is a real risk, that we can get in crosshairs with each other. So we managed through that, and there were some, working pains that any family would go through, I think, on the first year of us owning that company. But it was really neat. Megan embraced it. We came to the table, ready to go. We hired on Landon's baby sister, Addie, her youngest sister. Mm-hmm. So now Addie and Jen and Landon run the company. They all have complementary skill sets. Landon does the front of the house. Jen is the back of the house and marketing. And Addie runs the books and operations. And all of them are just phenomenal at what they do.
Wow.
And they get it done. We've had, it's funny because our revenues throughout this kind of post interest rate low and post COVID, our revenues have kind of declined since we bought it, but our net profits have gone up by like 121%. So it's a real testament to how they run a business. It's just been great. They're driving expenses down. And so we're in the process now of, and also what I'd say is really cool about this story is that it really passed from a woman-led and ran business to a woman-led and ran and owned business.
Yeah.
So all of them, Jen's got ownership in the company, Addie's got ownership in the company, we've got ownership in the company, and we have a few really close friends that helped us lift this and get it off the ground, that supported us and that own the company as well.
Well, I'm glad y'all have it, because those are some good pies. If you haven't yet had one of their pies, you need to go. Yeah.
And be careful, because they are calorie rich. There's no pulling punches on these pies.
No, you don't go eat that pie because you're on a diet. You go because I want to have fun.
Yeah, you want to indulge. Yeah, and
gosh.
it is. We're grateful for it. We're grateful for our customers and for the people that work with us. So it's been a blessing.
Charlie, this has been fun. Any other words of advice for our listeners on real estate, pies, raising 3 kids?
I would say, I'd say the Lord. I'd say Jesus. I mean, that's what I'd say. If you don't have a faith, get one.
Yeah.
And I hope it's Jesus. I hope it's God and His Son and the sacrifice He made. Yeah.
God is good.
Yeah.
All the time.
Yeah.
All the time. God is good.
Yeah.
Thanks for tuning in to Building Dallas, where we bring the stories that shaped North Texas. Subscribe, share, and stay connected. Until next time, keep building. Building Dallas is presented by Arrington Roofing, keeping North Texas covered, rain or shine.